got kind of the calm before what could be a very busy week shaping up down here on the floor of the stock exchange, of course, with today's bell, also with the markets. And so to get straight to that market perspective, I do want to bring in Michael Reinking. He's a senior market strategist for the stock exchange. And Michael, this might be the biggest week of the year when it comes to the Fed. Why?
Yes. So this, well, first off, thanks for having me this morning. Yeah, what I would say is typically when you head into a Federal Reserve rate decision, you have a pretty good idea of what the central bank is going to do. I can't think of the last time that we were 2 days away from the meeting and there was so much uncertainty as to whether the Fed would actually cut by 25 or 50 basis points. So, up until really Thursday afternoon, right around noon last week, I was squarely in the camp that they were going to move 25 basis points, right? They do tend to move, very methodically, by consensus. They like to, this committee especially has shown that they like to communicate what they're going to do. And there were a couple of factors, in the current environment, which really made me think that they wouldn't want to move, faster than 25 basis points, right? If you think back to the volatility that we had in August, right, that was driven by a lot of currency volatility, the U.S. dollar. That came after a surprise rate decision from the Bank of Japan, right? And that volatility seeped into equity markets. And if they had surprised markets at that point with a bigger cut, that would have once again potentially triggered a lot of that currency volatility and could seep back into markets. And what we had happened on right around noon last Thursday was we got an article from the Wall Street Journal's Nick Timiraos, who has actually earned the name the Fed Whisperer, really driven by an article that he put out in 2023 when markets were expecting a 50 basis point rate hike by the Fed during their media blackout window, and he had suggested that they were really considering 75, and the Fed ultimately did move 75. And in that article, he quoted multiple former Fed officials who were suggesting that there was a real case to be made for 50 basis points, and that even one of the Fed Powell's former senior advisors who just left the committee recently had suggested that. So we've now seen markets go from pretty much an 85% probability of a 25 basis point hike to about 65% probability this morning. So it's really a fascinating move that we've seen over the last couple days.
As our market guru here, Michael, how do you anticipate that stocks would respond to a 0.5 percentage point, 50 basis point rate cut by the Fed if we get that Wednesday afternoon?
Yeah. So that's another really interesting piece. What I think they've done by floating this story is they're able to kind of really control the message around that 50 basis point cut, right? So if they had just kind of come out of the blue and cut by 50, markets would have gotten really concerned, potentially questioning, what does the Fed know that we don't know? What they've done is really control that messaging going forward. They're telling us, right, that they're looking to potentially cut more because we're in, because policy rates are in such a restrictive, area relative to where they believe the neutral rate is, right? And they just want to get a jump start in moving, right? And so, that can actually add some confidence. It's going to be a difficult time period, like a difficult communication either direction. But, I think, at this point, markets are going to get the sense that the Fed is kind of on top of the situation. And I think we're going to, trade pretty positively.